At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you.
Today, October 7, 2022, think PayPal stock is cheap? Give Ayden a serious look instead. Do you think the story on digital payments is already written? Not so fast. Though the conversion to digital money has made rapid headway against cold, hard cash in the last couple of decades, much of the world is still very much a cash society. According to the World Bank, 76% of adults globally now have a bank account or an account with a mobile money provider, up from 68% 5 years ago. However, having access to financial services is just the beginning. Especially in developing economies, the majority of people with access only made their first ever digital payment during the pandemic. Suffice it to say, cash is alive and well, and digital money can still, and is expected to, see significant growth going forward. In the minds of U.S. investors, that points to opportunities for PayPal Holdings, NASDAQ, PYPL, and its various subsidiary businesses like Venmo. But PayPal's growth has been slowing and business execution issues have come up as the effects of the pandemic wear off. Before buying PayPal on the dip, give Dutch financial technologist Ayden a serious look first. The difference between a consumer-facing app and a trusted business partner. PayPal and Ayden are both digital payments giants, but most consumers have never heard of the latter. Rather than building consumer-facing apps like PayPal has done, Ayden has instead come to the market from the other side of the equation. It works behind the scenes building a digital point-of-sale system for merchants, whether that's for in-person transactions or for e-commerce. Ayden has focused on large businesses with its payments and financial management systems. An impressive list of customers are named on its site, from fast food superstar McDonald's to music streaming giant Spotify. Remember when eBay decided to ditch PayPal a few years ago in favor of its own digital payments service? It's Ayden that is now silently powering the e-commerce company's own payments platform. That's part of the beauty of Ayden. While PayPal is a household name in financial services technology, Ayden is happy to provide a white label service that merchants of all types can slap their own name on to build a stronger relationship with their customers. And as more big merchants around the world get up to speed with the digital times, Ayden is a perfect fit as a trusted fintech partner. An economic slowdown creates speed bumps. Ayden's incredible potential shows in the numbers. During the first half of 2022, the company processed €346 billion worth of transactions, a 60% year-over-year increase. That equated to €609 million in revenue in the first half of the year, up 37% from 2021. A global economic slowdown will no doubt put a damper on Ayden's trajectory going forward this year and into 2023. Plus, the fact transactions are reported in euros, remember, this is a Dutch company, can be problematic for US investors. The dollar has been on a record run this year, a side effect of the US Federal Reserve's aggressive interest rate hikes. As a result, the dollar has gained in value against the euro. A stronger US dollar lowers the value of overseas revenue and profitability. At some point, though, the dollar's run will slow, perhaps even reverse a bit, once the Fed is content with its work. That could be incredibly bullish for Ayden. This company is growing fast and is incredibly profitable. Free cash flow was €309 million in the first half of 2022, a whopping free cash flow profit margin of 51%. That puts Ayden in the same camp as digital finance infrastructure companies Visa and MasterCard in terms of profit-generating ability. In comparison, PayPal is projecting revenue growth of about 10% this year. Free cash flow margins for PayPal sit at about 20%. Economic challenges and currency exchange rate issues are hitting the far larger PayPal too, making Ayden the better business from a growth perspective. Is Ayden the better buy? As of this writing, PayPal trades at an enterprise value to EBITDA ratio of 26. Ayden trades for a much higher premium enterprise value to EBITDA ratio of 45. However, for a 70% premium over PayPal, investors get a company that is far more profitable, growing revenue more than 3 times as fast, and has zero debt and lots of cash. I own PayPal stock and plan on holding through its current downturn, but Ayden looks like a much better buy right now. My new investment dollars for a digital payment stock will go toward Ayden.
Thanks for watching Numerian Capital News. Please come back tomorrow for another stock news update. Thank you.